Well, the background of Target Healthcare REIT is post-Lehman Brothers 2008, self-evident that the value of modern purpose-built care homes, along with many other care homes in the sector, had significantly reduced, and therefore an opportunity for us to create a fund that would create value for the investors that would come in any new vehicle we created. So we started doing that in 2010 with a non-listed fund, and a couple of years into that we started looking at the possibility of having a listed fund, and Target Healthcare REIT was born in 2013. The kind of assets that we invest in are modern purpose-built care homes, particularly care homes that have good public and private space, particularly care homes from a variety of operators so that we have diversity in our income, and in particular also care homes that have good wet room capacity for all the residents. That is a fundamental part of what we're about. Target Healthcare REIT is externally managed. Target Advisors, the company that I run, is the investment manager. We've been around, as I say, since 2010. All we manage is investments in the care home sector. This is our niche specialism. And we have a typical contract with Target Healthcare REIT to provide management services. Our investment criteria is more of the same. We invest in modern purpose-built care homes. We invest in care homes with a diversity of operators, so there's diversity of income, and we invest in modern purpose-built care homes, and we plan to continue to doing that. We've been doing it in the REIT now for just over 4 years. And we're trying to be a long-term, boring institutional fund, not very exciting, but consistently throwing off every quarter another element of the income, which in terms of the original investors is an inflation-linked long-term income source of around about 6% on the original issue price. We funded acquisitions with the debt that we have added to the equity we have raised. We've raised equity 5 times over the last 4 years, and we're a lowly geared fund, so we have a small element of debt, and these two together have given us the firepower to be able to invest in more homes. I would say the kind of investors in the sector vary from specialist funds like us, though we're the only listed fund which invests exclusively in modern purpose-built wet room stock, in the UK anyway. And then in the UK there are non-listed funds which have a number of different institutional type investors. The third group of investors in the UK are the institutions themselves, so there is some institutional investment. And then private equity is investing sometimes in the development end of the market and sometimes in the older stock element of the market. And then finally, there is some overseas interest, both from US REITs, who are probably a little less active currently, and also Middle East and Far East money. Now, the underlying driver is demography and human frailty. Taxes and death are two things that are certain, and prior to death, for most of the population, is a period of significant frailty. And typically, our residents spend about the last 15 months of their lives in the care home. So that's a fundamental driver, because over the next 20 years, the number of over 85s doubles in that period. And on average, 15% of the population end up in residential care. So 1 in 7 of us will end up in residential care. So there's a fundamental driver that there will be more beds needed in the coming period. There are excellent examples really of us continuing to work with our tenants, where we have strong relationships. Today we have 16 tenants, so a strongly diversified income base. And 2 of our tenants have been speaking to us about adding more homes to their portfolio and therefore to our portfolio, and they're 2 very good examples of exactly that happening. As I said earlier, Target's trying to be boring and repetitive. 1 or 2 folks have suggested that we are one of the few examples of a really good institutional fund in the listed space in the care home market, and that's what we are attempting to be So what do we do over the next 12 months? I hope what we've done over the previous 51 months.